And we're live. Welcome everybody to another video of the Barbarian Trader. So we'll go live with Mr. Jerome Powell as he speaks at the Institute of Economic Outlook. All right, so let's hear him.
Energy inflation components, which have been lower recently but can be quite volatile. Our inflation goal is for total inflation, of course, as food and energy prices matter a great deal for household budgets. But core inflation often gives a more accurate indicator of where overall inflation is heading. 12-month core PCE inflation stands at 5%.
In the real time, we'll look also at the market reactions.
Where it stood last December when policy tightening was in its early stages. Over 2022, core inflation rose a few tenths above 5%. And it fell a few tenths below, but mainly it moved sideways. So when will inflation come down? I could answer this question by pointing to the inflation forecasts of private forecasters or of FOMC participants, which broadly show a significant decline over the next year. But forecasts have been predicting just such a decline for more than a year, while inflation has moved stubbornly sideways. The truth is that the path ahead for inflation remains highly uncertain. For now, let's put aside the forecasts and look instead to the macroeconomic conditions we think we need to see to bring inflation down to 2% over time. For starters, we need to raise interest rates to a level that is sufficiently restrictive to return inflation to 2%. There's considerable uncertainty about what rate will be sufficient, although there's no doubt that we've made substantial progress, raising our target range for the federal funds rate by 375 basis points since March. As our last post-meeting statement indicates, we anticipate that ongoing increases will be appropriate. It seems to me likely that the ultimate level of rates will need to be somewhat higher than thought at the time of the September meeting and the summary of economic projections.
Okay, so
I will return to
high
policy
rates.
at the end of my comments, but for now I'll simply say that we
on
have
the left I have Bitcoin, on the right top
We're
I
tightening the
have
stance of
S&P
policy in order
US
to
dollar,
slow growth in
on the
aggregate
bottom I
demand.
have S&P
Slowing
500.
demand growth should allow supply to catch up with demand and restore the balance that will yield stable prices over time. Restoring that balance is likely to require a sustained period of below-trend growth. Last year, the ongoing reopening of the economy boosted real GDP growth to a very strong 5.7%. This year, GDP was roughly flat through the first 3 quarters, and indicators point to modest growth this quarter, which seems likely to bring the year in with very modest growth overall. Several Russia's war against Ukraine and our policy actions, which tightened financial conditions and are affecting economic activity, particularly in interest-sensitive sectors such as housing. So we can say that demand growth has slowed, and we expect that this growth will need to remain at a slower pace for a sustained period. Despite the tighter policy and slower growth over the past year, we have not seen clear progress on slowing inflation. To assess what it will take to get inflation down, it's useful to break core inflation into 3 component categories: core goods inflation, housing services inflation, and inflation in core services other than housing. Core goods inflation has moved down from very high levels over the course of 2022, while housing services inflation has risen rapidly. Inflation in core services ex-housing has fluctuated, but shown no clear trend. And I'll discuss each of these items in turn. Early in the pandemic, goods prices began rising rapidly as abnormally strong demand was met by pandemic-hampered supply. Reports from businesses and many indicators suggest that supply chain issues are now easing. Both fuel and non-fuel import prices have fallen in recent months, and indicators of prices paid by manufacturers have moved down. While 12-month core goods inflation remains elevated at 4.6%, it has fallen nearly 3 percentage points from earlier this year. It is far too early to declare goods inflation vanquished, but if current trends continue, goods prices should begin to exert downward pressure on overall inflation in coming months. Housing services inflation measures the rise in the price of all rents and the rise in the rental equivalent cost of owner-occupied housing. Unlike goods inflation, housing services inflation has continued to rise and now stands at 7.1% over the past 12 months.
We have 200
housing
moving average
inflation
daily
tends to lag
on
other
S&P
prices
500
around
as resistance.
inflation turning points, however, because of the slow rate at which the stock of rental leases turns over. The market rate on new leases is a timelier indicator of where overall housing will go over the next year or so. Measures of 12-month inflation in new leases rose to nearly 20% during the pandemic,
and let's see if Bitcoin, okay, so 70,000, let's see a reaction from
as
this
figure
level.
3 shows, however,
Just
overall
above,
housing
we might
services
see
inflation has
a swing
continued to
failure pattern
rise
with
as existing
those
leases
stocks.
turn over and jump in
Keep
price
an eye on June
to
low
catch up with the
as
higher level of
resistance,
rents for new
as high
leases.
resistance.
And this is likely to continue well into next year. But as long as new lease inflation keeps falling, we would expect housing services inflation to begin falling sometime next year. Indeed, a decline in this kind of inflation underlies most forecasts of declining inflation. Finally, we come to core services other than housing, and this spending category covers a wide range of services, from healthcare and education to haircuts and hospitality. This is the largest of our 3 categories, constituting more than half the core PCE index.
Be
Thus,
very
this may
careful
be
at
the
bull
most
traps.
important category for understanding the future evolution of core inflation. Because wages make up the largest cost in delivering these services, the labor market holds the key to understanding inflation in this category. In the labor market, demand for workers far exceeds the supply of available workers, and nominal wages have been growing at a pace well above what would be consistent with 2% inflation over time. Thus, another condition we're looking for is the restoration of balance between supply and demand in the labor market. Signs of elevated labor market tightness emerged suddenly in mid-2021. The unemployment rate at the time was much higher than the 3.5% that had prevailed without major signs of tightness before the pandemic. Employment was still millions below its level on the eve of the pandemic. Looking back, we can see that a significant and persistent labor supply shortfall opened up during the pandemic, a shortfall that appears unlikely to fully
Welcome
close
guys in the chat.
Comparing the current
Yes,
labor
Mike,
force
it
with
is
the Congressional
possible.
Budget Office's pre-pandemic
We might
forecast
see
of
a
labor
bull
force
trap.
growth reveals a current labor force shortfall of roughly 3.5 million people. This shortfall reflects both lower than expected population growth and a lower labor force participation rate. Participation dropped sharply at the onset of the pandemic because of many factors, including sickness, caregiving, and fear of infection. Many forecasters expected that participation would move back up fairly quickly as the pandemic faded. And for workers in their prime working years, it mostly has.
Okay,
Overall
US
participation,
dollar have a
however,
gap
remains
above,
well below
so it is
pre-pandemic
possible
rates.
to dump.
Some of the participation
and
gap
pump to
reflects
close this
workers
gap.
who are still out of the labor force because they're sick with COVID-19 or continue to suffer lingering symptoms from previous COVID infections or long COVID. But recent research by Fed economists finds that the participation gap is now mostly due to excess retirements, that is, retirements in excess of what would have been expected from population aging alone. These excess retirements might now account for more than 2 million of the 3.5 million person shortfall in the labor force. What explains these excess retirements? So health issues have surely played a role, as COVID has posed a particularly large threat to the lives and health of the elderly. In addition, many older workers lost their jobs in the early stages of the pandemic when layoffs were historically high. The cost of finding new employment may have appeared particularly large for these workers, given pandemic-related disruptions to the work environment and health concerns. Also, gains in the stock market and rising house prices in the first 2 years of the pandemic contributed to an increase in wealth that likely facilitated early retirement for some people.
Rising
the data
wedge
so far do not
on
suggest
S&P 500
that
12 hours,
are likely to
so
unwind
if you are
because of
longing
retirees
S&P, be
returning to the
very
labor
careful.
force. Older workers are still retiring
Same
at
we
higher
can say
rates,
for Bitcoin.
and retirees do not appear to be returning to the labor force in sufficient numbers to meaningfully reduce the total number of excess retirees. So, the second factor contributing to the labor supply shortfall is slower growth in the working age population. The combination of a plunge in net immigration and a surge in deaths during the pandemic probably accounts for about 1.5 million missing workers. Policies to support labor supply are not the domain of the Fed. Our tools work principally on demand. And without advocating any particular policy, however, I will say that policy to support labor force participation could, over time, bring benefits to the workers who join the labor force.
If this rising wedge on Bitcoin 4 hour will play out, we can look for targets, let's say some things.
For the near
like
term,
that.
a moderation of labor demand growth will be required to
Maybe
restore
this low
balance
will
to
be
the
tested again.
Currently, the unemployment rate is at 3.7%, near 50-year lows, and job openings exceed available workers by about 4 million. That is about 1.7 job openings for every person looking for work. So far, we've seen only tentative signs of a moderation in labor demand. With slower GDP growth this year, job gains have stepped down from more than 450,000 per month over the first 7 months of the year to about 290,000 per month over the past 3 months. But this job growth remains far in excess of the pace needed to accommodate population growth over time, about 100,000 per month by many estimates. Job openings have now fallen by about 1.5 million.
Looks like 1 hour on Bitcoin
higher than at any
is keep
time
getting
before.
rejected by 0.236
Wage growth, too,
Fibonacci.
shows only tentative signs of returning to balance. Some measures of wage growth have ticked down
Once
recently,
this one is
but
filled in
declines are
support,
very
it is
modest
possible
so far
to see a
relative
pump
earlier
to the next
increases
Fibonacci
and
level,
still leave wage growth well above levels
17,700,
consistent
and
with
this
2%
might
inflation over
it's
time.
matching with June low,
To be clear, strong wage growth is
and
a
we'll
good
see a
thing.
reaction from here.
But for wage growth to be sustainable, it needs to be consistent with 2% inflation. So let's then sum up this review of economic conditions that we think we need to see to bring inflation down to 2%. Growth in economic activity has slowed to well below its longer-run trend, and this needs to be sustained. Bottlenecks in goods production are easing, and goods price inflation appears to be easing as well, and this too must continue. Housing services inflation will probably keep rising well into next year, but if inflation on new leases continues to fall, we will likely see housing services inflation begin to fall later next year. Finally, the labor market, which is especially important for inflation in core services ex-housing, again accounting for more than half of the category, shows only tentative signs of rebalancing, and wage growth remains well above levels that would be consistent with 2% inflation over time. So despite some promising developments, we have a long way to go in restoring price stability. Returning to monetary policy, my FOMC colleagues and I are strongly committed to restoring price stability. After our November meeting, we noted that we anticipated that ongoing rate increases will be appropriate in order to attain a policy stance that is sufficiently restrictive to move inflation down to 2% over time. Monetary policy affects the economy and inflation with uncertain lags, and the full effects of our rapid tightening so far are yet to be felt. Thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, the timing of that moderation is far less significant than the questions of how much further we will need to raise rates to control inflation and the length of time it will be necessary to hold policy at a restrictive level. It is likely that restoring price stability will require holding policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy, and I'll close by saying that we will stay the course until the job is done. Thank you.
All right, so, okay, let me hide this and mute it. All right, so let's have a look. Bitcoin didn't move so much. All right. S&P 500, it's at the bottom of this rising wedge. US dollar for the moment is finding support at 200 daily moving average. Okay, let me minimize this so it will not distract me. Okay, so US dollar, as long as he's holding 105.5 area of support, we can see a bounce up. Okay, maybe a possible double bottom here and a move up, or who knows, maybe an inverse head and shoulder and only then a move up. So keep an eye on US dollar. S&P 500, probably choppiness. It is possible to see another retest of 200 daily moving average and this rising wedge to play out. In this way, probably, if this will happen, probably it will pull the Bitcoin down with it. For the moment, Bitcoin painted on 4 hours, a rising wedge. Of course, we have all kinds of patterns. We have this rising wedge, we have this descending triangle. Okay, let me color it with blue so it will make a difference. So depends how do you want to paint it anyway. Even if you take this top and you connect with this high. So as you can see, descending triangle, a rising wedge inside of bigger descending triangle. So if this descending triangle will play out, we might see targets as low as, let's see, let's do a projection. Yeah, there you go. It is possible to see 2019 high tested. Okay, so I will put a price level for you. And yeah, by the way, guys, if you want to see more charts in details and to join our VIP trading group, I will put a link in the description below, so you are welcome to join. Let's see. The thing is like this. Let's talk about something that worries me, and we have to keep an eye on Bitcoin for the next hours. Okay, so for the moment, we'll talk also about this big falling wedge on daily that might play out, and yes, we might see higher targets. But the thing that it worries me, and I talked a lot in the past about this huge rising wedge on monthly, it's this. Okay, so what we can see, this is 50 moving average. We are looking at monthly logarithmic chart. Huge rising wedge, this blue one. Okay, Bitcoin monthly is closing below previous all-time high. First time when it's happened something like that after a strong break of previous all-time high is the first time when it's happening this. On weekly we have a kiss of that, and we'll talk immediately about this. But the thing that it worries me, okay, let me delete this, it's this. As you can see, this huge rising wedge was broken here, okay, with the June low, 70,600 area. If the monthly candle will close below this, okay, guys, this huge rising wedge, it's double confirmed, triple confirmed, okay, because it was already confirmed on weekly. So if we are looking at the weekly chart, we see that weekly already closed below June low, okay, multiple times. So somehow this, okay, this huge rising wedge is confirmed. But if monthly will close under this, okay, let me put the price level. There you go. If monthly is closing below 70,600, so we'll see in few hours, we are in a very big trouble long term, okay, like huge trouble. Because the target for this huge rising wedge is somewhere under 7,000, okay? And I strongly recommend you to watch my previous videos where I'm discussing about this huge rising wedge, okay? So if the target is closing below, remember 17,600, long term we can be extremely bearish, okay? Short term, yes, we might see a retest of the bottom of this huge rising wedge, so Bitcoin can pump even to 25,700 area, 26,000, even 27,000 in the next. Let's see, let's switch to monthly. in the next months. So next year it is possible to start bullish for the first months, and then to trap a lot of bears, a lot of bulls, and only then this will start to play out, because the target for this one, it's at least at 6,500. Okay, it depends how it will play out, can go even as low as 3.5k. okay, on this bottom. I know it's hard to believe that, but I think this could be an area of final support, okay, and choppiness. Keep in mind, under 50 moving average for a very long time, for, I don't know, probably from the at least, let's see, probably, yeah, at least about 9-10 years. First time when Bitcoin is closing monthly below a previous all-time high, after they broke the all-time high, previous all-time high. Then on weekly, let me switch to weekly. Okay, let's see where I have a weekly chart here. Let me switch to weekly. On weekly, we have kiss of death with 200 moving average. So here is the 200 moving average. They broke 200 moving average. Okay, sorry. Okay, so broke, tested resistance, close below, kiss of death. Okay. Yes, indeed, on weekly, and let's switch to daily chart. We have this falling wedge, and it might match with what I told you, that we might see a pump, okay, in the next months. So if this falling wedge will play out, we might see again 200 moving average weekly tested. Here is 200 moving average daily, so let me put some price levels. So we have resistance here. As you can see, guys, they just chop sideways and pull the 200 moving average daily just under this 25,200 previous high. Okay, so even if they will pump, probably we'll see a pump here, take all the liquidity above this, okay, swing failure pattern, and only then will nuke down. Okay, it is possible to go lower from here and test 2019 high, and we might see some. Oh, you are very welcome, Pike. Big Pike from our group, amazing trader. All right, so big shout out, guys, for the people from our group, from the big traders: Pike, Xen, Adriana, Chris, PP Long, Detonate, and many others. Again, you have the link to join our VIP trading group in the description below. All right, as you can see, the Bollinger Band on daily is getting tighter, so we might see some volatility on both ways. Here looks like we have like a bottom possible to see in the next days, or maybe next week, a test of this of the top of this falling wedge. So let me put a price level. Guys, if you haven't subscribed yet, don't forget to subscribe and hit the notification button, so you'll be notified every time I go live. And also, I'm doing special live videos with more details, price levels for the subscribers. So hit the subscribe button right now. All right, yes, Spike. Monthly will close in 5 hours, so it will be nasty. I think we'll see some volatility. Yes, Adriana, indeed, will be interesting. It will be interesting because, as you can see, daily is between top of the Bollinger Band and the bottom. Maybe they test this. We'll see probably some volatility on smaller time frames. But I think there is a pretty big chance, if they will dump, it is possible to see just a fake dump here, trap the bears, and then pump. So liquidate the bears, and then trap the long position, then go back and liquidate long positions. Guys, keep in mind, there are no money in the market, okay? Check this volume, it's horrible, okay? It's horrible. There are no money in the market. Institutions, they are not buying here until there is no clarity regarding the legislation, the rules. So it's still is still a chaos on the crypto market. Okay, it is possible next year to see some maybe new laws coming, and of course this will bring some very nice fuel for Bitcoin and crypto. So probably if you want to start to do dollar cost average, probably it could be a good point to start to buy just a bit of Bitcoin, and then set your buying orders lower and lower, probably down to 5-6K. Okay, never underestimate Bitcoin. All right, so keep an eye on 17,600 area. All right, let's go back to this smaller time frame. Okay, US dollar is dumping, S&P 500 is pumping. Let me zoom in. All right, but still inside this rising wedge. So until they don't flip this in support, it is still bearish. Until they don't flip 4,091, 4,100 area in support is still bearish. So usually you know how it is. First they go in the opposite direction and then they continue. If they pump, they dump afterwards, or if they dump, they pump, or they pump afterwards. Bitcoin. Okay, Bitcoin, let me zoom in. What we have above, we can look for a possible swing failure pattern in the 17,121, 17,200 area. Okay, so maybe they will break this diagonal fake break. Okay, retest this top of the rising wedge as resistance, 17,100. We'll see how this will behave. It is possible to see a spike up. Guys, keep in mind, Bitcoin, it's at the bottom of a big rising wedge. So don't be surprised if you see a pump of, let me take this, of 15, 20, 26%. Okay, just one daily candle, because as you can see here, we have 1 day, 2 days. Okay, they dump almost 23%. So if we have a reverse BART here, okay, they might do something similar and liquidate all the short positions, all the late short positions. Okay, so be very careful shorting this. Risk reward, as I talked in the last videos, is not a great one on this level. Okay, for the short positions. Okay, if you trade on small time frames like 15 minutes, 30 minutes, 1 hour, yes, you can do some very nice and very sweet trades, but otherwise you have to be very careful, because let's say, okay, it might dump to test 2019 high, okay, from this point, so it's about 15%. But if it's pumping to test 200 daily moving average, they might pump 30%. So risk reward is horrible here. Okay, maybe they will not even get here. If they will dump, probably they will do just another test on this on the bottom of this falling wedge. All right, but for the moment, daily looks like might close above 20 moving average, 2021 moving average. 200 daily moving average is above, and there is a very big chance to be tested. Okay, it is possible to see some choppiness here, and they pull this down, and maybe they test it here, false break, and then we'll see. We have to keep an eye. I will try to keep you updated, guys. So again, don't forget to subscribe and hit the notification button, so we will be up to date with my future lives. All right, so let's see. Yeah, 4 hours. Let's see the volume. Pretty weak, guys, because as you can see on the previous pump, it was the volume again, is dropping. So 58 minutes for this 4-hour candle to close. And US dollar, yes, US dollar have the support. The biggest support is here. So we have a big support on 101.57 points, something like that. So it is possible to dump and test this support at some point. So it is possible to see some choppiness along 200 daily moving average. Even it will start to move up afterwards. It is possible. Okay, so yes, be careful with short positions in on Bitcoin, Ethereum, and crypto, especially on altcoins, because now on the low volume, guys, they can pump altcoins like crazy. Okay, so they can trap much more bulls. Okay, more newbies, new traders, they will throw the money in the crypto again, hoping that it will go to new all-time high. Guys, let me tell you something, and remember this. Okay, if this candle of monthly candle, okay, will close below 17,600, 650, 620, 650, I think there is a very, very low chance to see new all-time high for multiple years. Okay, because this one will play out. This huge rising wedge will play out. If we already have we have all kind of confirmations. Okay, we have keys of that on weekly, so we'll see lower targets. We have continuous rejection from 50 moving average on monthly. Check this out, guys. Rejection from the bottom of the rising wedge, rejection from the 50 moving average, which was big support in the past. So check this out. Support. Okay, support. Okay, now it's resistance. Guys, sooner or later, it's just like a rubber. Okay, this is the how to say, the origin. Okay, the point zero. Okay, you keep it above long enough. Okay, it will pull it below, and usually it's something symmetrical. Okay, so let's see, if we have the top here and the average was somewhere here, yeah, there you go, we can expect something like that. So don't think that this is the bottom. It's far from the bottom. Okay, as you can see, the only volume is coming here, it's only selling volume. Okay, we don't have buying volume. So as long as some buying volume is coming, they are selling again. All right, so they are just filling their bags again. So keep in mind, if this one will close below, we'll see soon. Okay, we have exactly almost 5 hours without 5 minutes. In 5 hours, we will see if this monthly trend will close below. After that, in our trading group, we will look for the most sweet and best position to short again and short again and short again and take the moon boys money. Okay, because in the end, guys, trading, stop believing in this mumbo jumbo. We must hold together. We are traders, guys. If you don't take somebody's money, somebody else will take your money. This is how it works. Okay, if the game is too strong for you, or if you don't like it, don't play it. Okay, nobody force you to push the button. Nobody force you to enter long or short on some specific levels. If you don't know how the game is played, don't play it. Okay, don't play it, because by the dip, it was to not say strong words, okay, wrong idea. Remember, wrong idea. Okay, by the dip, you hear so many times buy the dip from many let's say influencers from YouTube. Okay, and so many people lost so much money, including Michael Saylor, who were recommending to take the second mortgage on the house to buy 44,000, okay, Bitcoin. It will be a disaster for you. So no, learn technical analysis, join a group, a very good group, if you don't know how to do it for yourself, and to learn from there, okay, learn from other traders' experience. This is how it's working. Otherwise, if you think you are lucky, if you think that you figure it out, it's just gambling. You can do the same, just take your money, go to a casino. At least there you have a free drink, okay? So let's go back to the chart. Let's see, Bitcoin, okay, is testing this diagonal as support, as resistance, sorry. So let me put a price level for you, and I will make it smaller. There you go, is testing this one. Let's see if they flip, they are testing again, 70,000, as you can see. S&P is getting closer to 200 moving average. All right, US dollar is still dumping. So we'll see in the next days, but keep in mind, rising wedge on S&P 500 still below, okay, 200 daily moving average. Bitcoin inside of a rising wedge, so it is possible to do just some choppiness. I still give a chance of retest of 17,500 of June low and keep an eye on this level, because we have the 0.382 Fibonacci, and this one might give a good rejection. Okay, sorry. All right, so this one might give a good rejection if the price will get there. Again, keep in mind, the Bitcoin can just start to pump, okay? So don't underestimate Bitcoin. Don't go short here, just wait for a proper position, okay? In case of a strong pump, in case of a better level to go short. Otherwise, you might, a risky word, okay, is not in your favor, okay? Better look for a position to go long, okay? So a position to go long, it is possible on a retest, sorry. Let me move this. So if you really want to go long and you want to have patience, I think 2019 high will give a good bounce, okay? Not a financial advice, it's just my opinion. Probably if you want again to go long, better just buy on spot and hold, because if you enter here long with leverage, it's still possible to see a rejection from this area and this rising wedge to play out. Okay guys, so this is it for today. Thank you for watching. Thank you everybody for watching. Again, don't forget to subscribe and hit the notification button, as I will try to analyze more the reaction from the Mr. Powell speech. We'll see the reaction in the next days. We'll see if the US dollar will dip below 200 daily moving average, if S&P will manage to reclaim 200 daily moving average, okay? What it will happen with Bitcoin, if they will manage to reclaim June low, if monthly will close above June low or below June low, okay? Okay guys, this is it. Again, thank you for watching. Until next time, trade safe. Barbarian out.